Hey fellow investors, it's Thursday, December 17th, 2020. I'm Hoda, co-founder and CEO of StockCard, and here is a recap of today's market's noteworthy movements. All three indices finished Thursday in the green, and the Nasdaq index led the pack as usual. Congress is getting closer to the new stimulus package, and the second COVID-19 vaccine by Moderna got the blessing of the FDA's approval panel. Both news gave the market the boost it needed to stay above zero. For the winners of the day, let's talk about a company brought to my attention by our users. Shares of Tattooed Chef were up by more than 5% on Thursday. This is a company that went public via a SPAC IPO, and it is riding the wave of the global interest in plant-based food. This hipster new packaged food startup is flying off supermarket shelves. On Thursday, the price jump came after the announcement that the company introduced 2 new product lines, making investors hungry enough to stock up on TTCF shares. On the negative side, as the company's stock card shows, there are so many unknowns about this company if you go and check it out. It is priced like a technology startup if you consider its current market cap over its annual revenue. Although it has been growing more than 60% or so, its growth relies heavily on 5 customers, Walmart being one of them. If it loses Walmart's contract as an example, that's a big risk. In the end, this is a risky new IPO priced for rapid growth and needs to build the manufacturing capacity to address the demand for plant-based food. The money raised through the IPO can help the company do just that. It is worth watching as a part of the trend in the global appetite for plant-based food. From my personal watch list, shares of Chicken Soup for the Soul Entertainment were down by more than 3%. This company is building an ad-supported streaming platform. Instead of paying a subscription to get unlimited movie access and watch TV on the internet, you accept to watch ads in between your shows and TV programs. Roku's success has proved that the ad-supported internet TV is quite a viable alternative to subscription-based streaming. Therefore, CSCC could have the potential to benefit from that trend. The price drop on Thursday and in the recent few weeks comes after the announcement that the company's partner, Sony, who has a stake in CSCC, has decided to sell its ownership, which was enough to cast doubt in investors' mind and drag the stock price down. For the last story of the day, let's talk about Robinhood turned Prince John. The SEC fined the popular commission-free investing pioneer $65 million for misleading its users and leaving them worse off financially. The SEC figured out that the company's practice of selling its users' orders to the so-called market makers ended costing Robinhood's users money in form of more expensive prices for their orders. Selling orders to market makers is not illegal, of course, but not telling users what the company does to make money is the issue. That's why the SEC fined the company. The ironic part of the story is that for an app that makes trading accessible and calls itself Robinhood, costing its users money in executing their orders is not so much Robinhood-like. It seems Robinhood turned Prince John in this real-life Robinhood story. That's it for today. If you like these quick market recap reports directly from my daily market research, please like and subscribe and share with your fellow investors. I will see you tomorrow.